Welcome to Facts, where finance comes alive. If you're in business, banking, or just curious about global trade, today's topic is a game changer. Did you know that 90% of international trade transactions involve banks, not just buyers and sellers? One key reason is the letter of credit, or LC. It's a financial tool that turns international mistrust into reliable trade. Today, I'll help you understand what an LC is, how it works, why it's used, and the risks you absolutely need to avoid. So, what's a letter of credit? Think of it as a written promise from a bank, acting on behalf of a buyer, to pay the seller, as long as the seller delivers specific documents that meet the LC's conditions. Here's the thing, LCs are all about paperwork. Banks don't check the actual goods, just the documents. Let's talk about why you'd use an LC in the first place. Trading across borders is risky. You're dealing with people you may never meet, political drama, unexpected payment delays. An LC solves this problem. The seller gets peace of mind that they'll be paid, and the buyer controls payment, so it only happens if the goods are shipped as agreed. Take this example. You're an Indian steel trader, importing coal from Indonesia. How do you make sure you get your coal before handing over your money? Easy. Use an LC. Who's involved in an LC? There's the applicant, that's the buyer. The beneficiary, that's the seller. The issuing bank, which is the buyer's bank. The advising bank, which is the seller's bank. Sometimes there's a confirming bank, adding an extra layer of guarantee, and a negotiating bank that checks documents and releases payment. Pro tip. In domestic trade, the advising and negotiating bank are often the same. Here's how an LC works, step by step. First, the buyer and seller agree on the trade terms. The buyer asks their bank to issue an LC in favor of the seller. The LC goes to the seller's bank. The seller ships the goods and submits all the required documents. The bank checks if the documents match the LC terms. If everything's in order, the seller gets paid. The buyer then uses those documents to claim the goods. Don't forget, every single document, whether it's an invoice, bill of lading, packing list, or insurance, needs to match the LC exactly. Even a typo can cost you. What kinds of LCs are there? There's the revocable LC. Can be changed anytime, but it's rare and risky. The most common is the irrevocable LC. Can't be changed without consent of beneficiary. Confirmed LC adds another bank's guarantee. Sight LC means instant payment after document check. Usance or deferred payment LC lets you pay after some time. Standby LC works as a backup guarantee. Back-to-back and transferable LCs are favorites for traders dealing with multiple suppliers. What documents do you need for an LC? Usually commercial invoice, bill of lading, packing list, insurance certificate, certificate of origin, and maybe an inspection certificate. Here's a tip: train your documentation team well. Even small mistakes can slow down or block your payment. Now the risks. LCs are strong but not bulletproof. Watch out for document discrepancies, fake LCs, or political risks in certain countries. Banks can also delay document checks. To manage these, always work with reputed banks, reconcile terms with your trading partner, and hire experienced trade finance pros. Let's zoom in on India for a sec. LCs are everywhere in coal, steel, oil, chemicals, and big equipment imports. For example, JSW Steel might import coking coal from Australia using an LC through SBI or ICICI. The Australian supplier gets paid after handing over the shipment documents to their bank. Indian LCs follow RBI rules and international norms like UCP 600 and URR 725. Quick recap. A letter of credit ensures payment against performance. It's all about the right documents, not the goods themselves. Pick the LC type that fits your trade terms. Always follow RBI and international standards, and train your team to avoid costly mistakes. If you found this helpful, hit that like button, subscribe to Facts, and drop your questions in the comments. Want me to cover bank guarantees, Incoterms, or trade credit insurance next? Let me know. Thanks for watching, and see you in the next one.